Alright, for this video I wanted to go over the Earned Income Tax Credit for the 2024 tax year, and specifically I wanted to address some kind of misleading headlines and articles I'm seeing and other questions I'm getting from other taxpayers about seeing a headline about how they can get an $8,000 credit when they file their return this year. And so we wanted to go into some examples and some more specifics because that is partially true, but it's mostly misleading in my opinion because they're not telling you all of the nuance and the details and how that credit is calculated. And what they're going to find, what most taxpayers will find, is you're not going to get that amount. You might not even get close to that amount. So you really have to do the appropriate calculation on what your earned income is and then look at the table to figure out how much you can get. So I've got just one slide here. And I've got the publication 596, so this has all the information you need on who qualifies, how to qualify, and it has the EIC tables, which we'll reference as well. So just some high-level background on this. This is a credit available to taxpayers that are living in the U.S. and have earned income. Now, the credit is really designed to benefit the lower to middle income taxpayer and those with children. Now, you can still get the EIC if you don't have any qualifying children, but what we'll see when we look at the tables is that in most cases, you're going to need one or more qualifying children to be eligible for the credit. And in order to get this really high credit amount, you're going to need 3 or more children, and you're going to have to be within certain income bands. So the amount of the credit is going to depend on a couple of variables. So your earned income, how much investment income you have, your overall modified adjusted gross income, and the number of qualifying children that you have, if any. All right. Now, what's misleading about this $8,000 refund claim headline that I'm seeing? Well, first one is there's no scenario where a taxpayer filing a return without any dependent children can get even close to that dollar amount. And you'll see that when we look at the EIC tables. Now, the maximum amount of credit per the tables is actually $7,830. And this amount is going to be available in most cases to filers that have 3 or more qualifying children and their income falls somewhere within this range. If your income is below or above that range, the amount of credit that you're going to get is either reduced or it might be zero. All right. So that's kind of the first thing is there's a very narrow set of circumstances where you're going to get a very large earned income credit refund claim as is being advertised. So if we have a look at the tables, and we'll just look at some examples here so you can get a better sense of what it is I'm talking about. So if you're within the Pub 596 and you go down to the EIC tables, here's roughly how these, or basically how these tables work. So after you complete your earned income credit worksheet, you then come to these tables and you look up where your income falls within these ranges. So if we take this first entry up here on the right hand side, let's say for example your income per the worksheet is somewhere between $2,800 and $2,850. And then you look up what is your filing status. Are you single, head of household, or surviving spouse, or married filing jointly? And then it asks you how many qualifying children you have. So if you are within that income range and you have, let's say, 3 qualifying children with a married filing joint return, the earned income credit amount you're going to get is $1,271. All right, so already we see an example like all the other ones on this page where you're not getting anywhere close to the $7,830. So the question is, well, as you know, what changes and how do we get closer to that maximum credit amount? Well, if you scroll on down to the other pages, and you'll see the income ranges start to increase. You'll also notice that as the income increases so far, the amount of the credit increases. So if we go down to, let's say, for example, this table, if your earned income is between $15,200 and $15,250, and you are married filing joint with 3 children, now your credit amount is $6,851. If you have 2 children, it's $6,090, 1 child, $4,213. All right, so where is the range where we start to see these maximum amounts? Well, it starts around this range of the table. So we can see here the income starting $17,400 to $17,450. If you are single, head of household, or surviving spouse, and you have 3 or more qualifying children, then you see the $7,830 credit. All right, the same goes for the married filing joint return. Now, as you scroll further on down, you'll see that the income increases, but the maximum credit amount in these far right-hand columns remains steady at $7,830. All right. Now, you'll also notice that, if you have less than 3 qualifying children, your credit amount is decreased. So if we look at this example over on the left-hand side, if you're $18,400 to $18,450 and you have 1 qualifying child as head of household, your credit amount is $4,213. All right, so the credit amounts do steadily kind of increase, but then they start to phase out or I shouldn't say phase out, they start to get reduced when you get probably about this range. So, for example, if we go down to this next page, you can see here that, okay, if your income is between $34,400 and $34,450, and you're single head of household with 3 kids, you've got $53.65 of a credit, and married filing joint, 3 kids, $68.22. So you definitely want to file, claim the credit, whatever amount you're eligible for. But if you see any kind of misleading headlines, or if a tax preparer promises you that you're going to get a full $8,000, it might not likely be the case, right? They need more information on your income, your filing status, and how many kids you have. And as you continue to go on the list, you notice that the credit amounts continue to drop. So if you go down to, let's say, this page, and we're looking at these income ranges, if you are between $53,200 and $53,250, you're looking at $1,406 credit for single or head of household with 3 kids. And as you go on further down the list, you'll see a bunch of zeros start to fill in the table here, because this is indicating to you that you're not getting any credit at all, right? And so if we go all the way down to the bottom here, so $61,550 to $61,600. Notice that if you're single, head of household, or qualifying surviving spouse, it doesn't matter how many children you have, you're not going to get any credit. So for those taxpayers, it's unfortunate, right? We would all hope to get something, but it's totally phased out for single head of household or QSS filers if your income is within these ranges up here. And if you go all the way down, you'll notice that the married filing joint taxpayer, so on the right-hand column here, married filing joint, if your income is above $66,800, you're looking at nothing, all right, even if you've got 3 or more kids. Now, the table is not easy to read. I understand that. The IRS does have an earned income tax credit assistant. So this is a very helpful kind of work through where you can use this assistant to input your income, how many kids you have, what's your filing status, and it will help guide you in the direction of how much of a credit amount you should expect from an earned income tax credit perspective. All right, so that covers it for this video. I hope that was helpful. Remember, be safe out there with respect to tax preparers promising things that just aren't realistic, and have a happy tax season. Thank you.